Are you sick and tired of strategy hopping? In this video, I'm going to share with you my step-by-step 2025 trade plan and how exactly you can apply it to your own trading. If you're new here, my name's Liam, and I've helped hundreds of people not only get funded, but to become consistently profitable traders. I guarantee by the end of this video, you will have a full understanding of my exact trade plan. Let's go ahead and jump straight into this video. So this right here is on USD CHF. So this is actually on the 15-minute time frame. And the first thing that we need to understand within our trading plan is our directional bias. And we do that by simply using the 50, the 100, and the 200 exponential moving average. So if you look at the top left of my screen right here, you can see we have the 50, the 100, and the 200. So they're applied to your chart, okay? We're currently looking at the 15-minute time frame, and this is where we get our directional bias. So what you can see here is the 50, the 100, and the 200 exponential moving average are all in order. So for example, the 50 is on the top, the 100 in the middle, and the 200 is on the bottom. So this indicates to us as a trader that we are long bias on this market. So that means that when we turn up, so when we're trading either the London or New York session, we are only looking for longs on this market. Very, very simple. So we have an objective framework and we understand, when these are in order, then we will look for long trades. If this was vice versa, then we would be looking for short trades on this market. So this just means that, when we turn up to the markets, we know exactly what we're looking for, because that's a huge problem that a lot of traders face is, 1 minute they're chopping from longs, then they're short, and then, it gets very, very messy. Whereas we have a framework that keeps it very, very simple. So we understand this is step number 1. Step number 2 is our higher time frame alignment. So for example, if we pop over to the 1 hour time frame, like so, what we're looking at is the 1 hour time frame also agreeing with the 15-minute time frame? If so, this ensures that you're having a higher probability setup, and that is why we have this as trade score number 2. So what you can see here on the hourly is the 50, the 100, and the 200 is also indicating longs on this market, which is also implying to us that the momentum is clearly to the upside on all time frames, okay? Also on the hourly and on the 15-minute time frame. That is how you can trade a very high probability setup. So that is trade score number 2. The next thing that we need to understand is we need to be trading during a kill zone. So right here, let me just remove the EMAs just for simplicity. And let's just apply our Killzone indicator. So let's apply that right there. And what you can see is this marks on automatically the kill zones that we are looking at trading within. So for example, we have the Asian session, which is from 12 o'clock midnight up until 5 a.m. That is GMT, so from a UK perspective. And we have the London session, which is between 8 a.m. and 10 a.m. That is also GMT, of course. And then finally, we have the New York session, which is between 1 p.m. and 3 p.m. GMT. So step number 3 is ensuring that we are executing our trades within a kill zone. And I personally only execute between the London session and within the New York session. The reason why that we only execute between these sessions is because this is when the most amount of volume and volatility will come into the market. So that is why we only trade the London session, and that's why we trade the New York session. So we trade a mechanical rule-based system, which is also a trend following system. So we need to ensure that we're trading an environment where the markets are more likely to trend, right? So, that is why we trade the London session. That is why we trade the New York session, because that is when the markets trend. And finally, so step number 4 within the 2025 trade plan is ensuring that we see a liquidity sweep. So what you can see right here is we have an Asian session low. So we can go ahead and mark that on right here. And we understand that there's sell side liquidity resting below the Asian session low. And remember guys, we are long bias on this market based on the 15-minute time frame and also based on the hourly time frame. And what we want to see is a run of sell side liquidity. So for example, if price can come down, run the Asia session low, sell side liquidity, then we get our entry model. We can look for a potential long trade on this market to go with the trend, okay? Because this right here will be a manipulation, okay? And what we will be seeing is this is your accumulation. So right here, you can see the market is ranging. If we see this, this will be the manipulation after we have seen the accumulation. Then what we expect to see is the distribution in price to the upside to go with the trend. Because remember, institutions need to run sell stops. They need to run sell side liquidity in order to provide the fuel to move the markets in the intended direction. So that is why we need to see step number 4, which is a run on liquidity. So let's have a look right here. You can see we are during a kill zone. So we're during the London session. We're anticipating a liquidity sweep because that is what institutions need to do before they move price in the intended direction. So if you go back and study all of the biggest moves on the chart, what you will find 90% of the time is there was some sort of trap. There was some sort of liquidity sweep where traders were took out of the market. And then once we've seen that, institutions use that liquidity in order to move price in their intended direction, which we understand because our directional bias is long on this market. Therefore, price is more likely to continue to the upside based on the 15-minute, based on the hourly time frame. So we're stacking everything together. So you can see right here, let's just zoom in a little bit for you guys. We're sweeping the Asia session liquidity. And once we see the sweep of liquidity, what we need to do is then place a buy stop above the candle high. And then what we will have is an invalidation below the liquidity sweep. And we're simply going to target a 1 to 2 risk to reward. So this is a very objective way and understand that, if price pushes up here and triggers us long, we will have an invalidation below the liquidity sweep and we will target a 1 to 2. So every single trade that we place is fully mechanical. Everything is fully defined. So this risk profile right here ensures that if we're stopped out, we will lose, say, 1%. If we make profit, we will make 2% on this trade. There's no in between. There's no micromanaging. It's literally we're either triggered in and we profit, or we're triggered in and then we're stopped out on this trade. So you can see right here, during the London session, during our kill zone, we are triggered long within the market. Now either we are stopped out or our take profit is hit. There's literally no in between. Okay. So now all of our trade plan has been executed. Everything has presented itself, and these are the rules that I follow every single day within the market, because this is what gives you the edge, okay? And you can see during the London session, this trade hit take profit for a 1 to 2 risk to reward. So just to put this into perspective, for your own personal capital, have a think about what you're risking per trade. You may be on like a 100K account, so you're risking, say, 1%, $1,000. If this trade hits take profit, you're making $2,000. And just think, guys, you don't need very many of these trades each month in order to make a very good income. If you're only taking 3 or 4 of these a month, that is the potential to make some serious profits within the markets. Guys, and just please stop strategy hopping. I don't care if you trade my strategy. I don't care if you trade someone else's strategy. But what I do care about is the fact that you stick to one individual strategy. Trade that strategy for a month, a quarter, 6 months. Keep back testing the strategy. Optimize and really get good at objectively taking the trades. That is how you will become profitable within the markets. I've spoke to so many of you guys over the last couple weeks, and it seems like strategy hopping is the biggest issue for most of you guys. And what you need to have is belief within a trading system. And I've traded 6 years within the markets, but this strategy right here has a proven back-tested statistical edge within the financial markets. So if you keep executing this strategy over the long term, there is pretty much no way that you will not make money trading this strategy. And don't get me wrong, I don't guarantee that you're going to get rich overnight trading this strategy, because that is not the case. But what I do guarantee is this right here is a framework that will give you a 50 to 60% win rate within the markets. And I'm providing that for free on this channel. And you may ask, why are you providing all of this value for free? And the answer is very, very simple. You see, all of these concepts that I'm teaching right here is actually out there for free on the internet. It's out there on YouTube. It's out there on Google. These are not my individual concepts, and I did not make them whatsoever. However, my value comes from the implementation of this strategy. It comes from the step-by-step guidance, guiding you every single step and making sure that you're accountable to trade this strategy every single day. So my value doesn't come from teaching this strategy. My value comes from the implementation and the accountability aspect of trading this strategy with myself, with all of the members at Toto Capital. That is where the true value comes from.